Hey everyone, I'm Ravi Baghla from Ravishing Homes powered by Remax Realty Services. Today we're talking about something that stresses a lot of buyers, especially first-timers. What credit score do you really need to buy a home in 2025? Congratulations! You're about to take one of the most exciting steps in your life, buying your very first home. Whether you're dreaming of a cozy condo in the city or a spacious house in the suburbs, this journey is a big milestone and deserves to be celebrated. You're thinking about buying your first home in Canada. Maybe you've started picturing yourself in a new neighborhood, exploring local parks, or hosting friends and family in your own space. It's a thrilling time, but it can also feel overwhelming if you're not sure where to start. Before you get swept away by beautiful kitchens and backyard patios, let's talk about something that's just as important as location or price. Your credit score. It's a detail that's easy to overlook, but it can make all the difference in your home buying experience. Think of your credit score as the key to unlocking your dream home. Without it, the doors to homeownership might stay closed, but with the right score, you will have more options and better opportunities. It's one of the very first things mortgage lenders check when you apply for a loan. Your score helps them decide not only if they'll approve your mortgage, but also what interest rate you'll get. A higher score can save you thousands of dollars over the life of your loan. Your credit score has a huge impact on your home buying journey. It can affect how much you're able to borrow, the types of homes you can consider, and even how quickly you can move in. A good score shows lenders you're responsible with money and likely to make payments on time. It builds trust and opens doors to better mortgage options, making your dream home more attainable. On the other hand, a lower score might make it harder to get approved, or could mean you'll pay higher interest rates. But don't worry, your credit score isn't set in stone. There are steps you can take to improve it, even if it's not perfect right now. Understanding how credit scores work is the first step to getting into your dream home. With the right knowledge, you can take control of your financial future and make your home ownership dreams a reality. In this chapter, we'll cover the minimum score you need, practical tips to boost your score, and what to do if your score isn't quite where you want it to be. Let's get started on your path to unlocking your dream home. So, what's the magic number you need to buy a home in Canada? When it comes to getting approved for a mortgage, your credit score plays a huge role. It's one of the first things lenders look at when you apply for a loan, and it can make a big difference in the options available to you. Most lenders want to see a credit score of 620 or higher. This number is considered the minimum threshold for many traditional banks and mortgage providers in Canada. If your score meets or exceeds this, you're already on the right track. A score of 620 or above means you're considered a lower-risk borrower and more likely to get approved with a decent interest rate. Lenders see you as someone who's managed credit responsibly, which can make the approval process smoother and less stressful. If your score is 680 or above, you could unlock even better rates and terms. Higher scores often mean lower interest rates, saving you thousands of dollars over the life of your mortgage. You might also qualify for more flexible repayment options or a larger loan amount. Lenders see a high score as a sign of excellent financial health. It shows you pay your bills on time, keep your debts in check, and manage your finances well. This can give you more negotiating power when discussing your mortgage terms. If your score is below 620, don't panic. It doesn't mean home ownership is out of reach. There are still options available, and you can take steps to improve your score over time. Some lenders work with lower scores, though you may pay a higher interest rate. These alternative lenders can help you get your foot in the door, but it's important to understand the costs involved and make sure the payments fit your budget. It's all about finding the right lender for your situation. Shopping around and comparing offers can help you find the best fit, whether you're working with a traditional bank or a specialized lender. Improving your score can open more doors. Paying bills on time, reducing debt, and checking your credit report for errors are all great ways to boost your score and qualify for better mortgage deals in the future. Your credit score is a key part of your mortgage journey. Let's see how your score affects your mortgage and what steps you can take to get the best possible deal. Let's break down how your credit score directly affects your mortgage. Imagine you and a friend are both buying $400,000 homes at the same time. With a 750 score, you get a lower interest rate than your friend with a 640 score. Over 25 years, that difference could save you tens of thousands of dollars. A higher score can also mean you qualify for a larger loan amount. Lenders see you as a more attractive borrower overall. That's the power of a truly good credit score. Your credit score is important, but it's not the only thing lenders consider. They look at your payment history. Do you pay bills on time? Credit usage. How much of your available credit are you using? Length of credit history. How long have you had credit? Credit mix. Do you have both credit cards and loans? Recent applications. Have you applied for a lot of credit lately? Lenders want to see you can manage different types of debt responsibly. Too many recent applications can be a red flag. It's all about showing financial stability. Thinking about buying your first home. One of the best things you can do before applying for a mortgage is to boost your credit score. Even small improvements can make a big difference in the interest rates you're offered and the amount you can borrow. Lenders look closely at your credit history, so it's important to start preparing early. Always pay your bills on time. This is the single most important factor in building and maintaining a strong credit score. Late or missed payments can stay on your record for years, so set a goal to never miss a due date. To make things easier, set up automatic payments or use calendar reminders for all your bills. This way, you'll never forget a payment, and you'll build a positive payment history over time. Keep your credit card balances low. Ideally, you should aim to use less than 30% of your available credit limit. High balances can hurt your score, even if you pay them off every month. Avoid opening too many new credit accounts at once. Each new account creates a hard inquiry on your credit report, which can lower your score temporarily and make you look risky to lenders. Remember, every time you apply for new credit, your score can dip a little. Too many applications in a short time can add up and make it harder to qualify for a mortgage. Check your credit reports regularly for errors or outdated information. Mistakes can happen, and catching them early gives you time to fix them before you apply for a loan. You're entitled to a free copy of your credit report from Equifax Canada and TransUnion Canada every year. If you're new to Canada, start building your credit history as soon as possible. Consider applying for a secured credit card or a credit builder loan. These tools are designed to help you establish or rebuild credit, even if you don't have a long history. Another option is to become an authorized user on a family member's or friend's credit card. Their positive payment history can help boost your score, as long as they use their card responsibly. Start building your credit history now, and you'll be in a much stronger position when it's time to buy your first home. Taking these steps today can help you achieve your homeownership dreams tomorrow. Getting pre-approved for a mortgage gives you a head start in the home buying race. It shows sellers you're serious and speeds up the process. Working with a mortgage advisor is a smart move, especially for first-time buyers. They can help you understand your options, find the best rates, and guide you through the process. Even if your credit score isn't perfect, a mortgage advisor can help you create a plan. Don't let your credit score hold you back. Get expert advice. Navigating credit scores and mortgages doesn't have to be overwhelming. Here are 3 key takeaways. First, aim for 680 or higher to unlock the best mortgage rates and terms. Second, you can still buy a home with a score between 620 and 679. Just be ready for higher rates. Third, even below 600 is possible with the right plan and lender. Don't let your credit score stop you from buying a home. Knowledge is power. Take steps to improve your score. Talk to a mortgage professional for personalized advice. With the right guidance, you'll be on your way to homeownership. Start your journey today. If you want to check where you stand or prepare to buy later this year, call me at 905-302-5070 or visit RavishingHomes.ca. Let's build a custom plan that works for your credit, budget, and future goals, because your prosperity is our priority.